Welcome back to another video, and today I'm going to be giving you a quick overview of where the portfolio stands and what I forecast for this portfolio in the month of March. I plan on recounting my dividends and what I expect for the next month. Right now, the account sits at $18,626, with our biggest account, if you've been following, is the TFSA with just slightly under $15,000. And this has been fluctuating the last few days just because the markets have been a little bit rocky as of late. So one of the positions I've been adding to, and instead of a savings account where I just deposit money and collect 1 or 2% interest, we can buy money market funds. And these money market funds give you a better rate, and they are buying short-term treasuries. And so the one I have chosen to buy is the BlackRock iShares Premium Money Market Fund. And each share is about $50 per share, and they pay a monthly distribution of anywhere between 10 and 15 cents. So I currently have $450 in this ETF with 9 shares, and I don't plan on holding this for the long term. This is more as interest rates are higher, this will pay a little bit more. I will throw up a little annualized distribution yield for this ETF on the screen, and it'll give you a little bit of a better idea. I think they are about 4% annualized right now. Usually I think these ETFs pay about maybe 1% or lower even on any normal market cycle. So let's pop over to the dividend tracker and see what our dividends look like for the next month in March. So in the dividend tracker, we can track our holdings and we can edit them at any time. They don't quite support automatic Canadian accounts yet. That might be coming in the near future, but as of right now, I manually input these every week and just track them that way. So one of the features the dividend tracker has is the payout calendar, and the payout calendar allows you to see when you will get your dividends and distributions, and this is updated constantly. Whenever there's a new ex-dividend date or anything like that, that is updated from the dividend tracker. So in the month of February, we received 4 days of dividend payments, one being $16.34, $7, $8, and $3.50. So it comes out to be about $40-ish, I think. We'll check that in the spreadsheet after, but I'm curious to see what we stand at in the month of March. So we can navigate to the next month, and we can see on March 1st, we're going to receive just under $36 from Enbridge and Fortis. Now this SPAC is just a holder for cash positions in the dividend tracker, but Enbridge and Fortis are going to pay us $36. On March 6th to the 12th, we're going to receive $8, $9 from SCHD, and that's in the RSP account, and 70 cents from Alimentation Couche-Tard, which is one of the new positions I've been averaging into over the past while. And LQD is going to be paid on the 13th, 14th right here, and that is monthly pair for the bond ETF I hold in my RSP. QQQ and VOO are going to be paying the next week, and that'll be about $4. Those are smaller positions. And the last week, I'll be paid $6, and that'll be Pembina Pipeline, VDY, and CMR. And I actually think this VDY hasn't been updated because I think my position stands at maybe $10 to $15 per month in dividends. The CMR position is the new one, and that's what will pay $10 to $15 per share, or 10 to 15 cents per share every month. And that is just instead of holding cash, like I said. So if we come to the yearly forecast, March is one of more average months, and I know that this isn't quite accurate, but we're going to be expecting $61 in dividends, and as we continue to contribute more money into these accounts, we'll be compounding these as we go and buying more shares and receiving more dividends. So maybe in July, instead of $80 in dividends, we'll receive $90 because we'll be buying more shares in the next few months. So let's go to the spreadsheet and just check out to see how our progress has been going over the last while as we are contributing more money into these accounts. So in the spreadsheet, I track every month, every payment I receive, I input them into this spreadsheet, and you can see I earn $37.80 approximately, and that is one of our lower months in the TFSA here. Now, the RSP account, I have actually, I was tracking an RBC RSP in this, and I decided to not include that anymore in this portfolio tracking, just because you, the viewer, cannot see that. So I've only been tracking the Wealthsimple Trade RSP, and that's what I'll be doing going forward. So some of these will be a little bit skewed when you look at the RSP. So as of right now, I expect $707 in dividends every year, and this isn't quite updated, but our yield is about 4.18%, and that's fairly normal. It's a little bit higher, but as I buy into Alimentation Couche-Tard and some other companies that will have lower yields, that will slowly increase over time. So to see this a little bit better, let's check out the charts, and we can see how this has been growing over time. So one of our main income generators is the TFSA. This is tax-free income on capital gains and in dividends to some extent. And we can see that we're on this increasing trajectory over the last while, and it is cyclical, and because we have held many of the same holdings like Fortis and Enbridge and TELUS over the last while. So that's why you see some of these months having more income than other months, just because the holdings pay quarterly and only some pay monthly, like VDY and SCHD. So the cash accounts, I've actually toned that down and only been buying Berkshire B. Since they don't pay dividends, I don't want to be paying on any unnecessary taxes on this account yet. Once the TFSA and RSP are close to being maxed, I will be putting more money into this cash account to allow it to grow a little bit differently than it is right now. So overall, the cumulative amount has been increasing over time. You can see that last year in February, I received $22, and this year it was $38, almost double. And I expect this to continually increase as I contribute more money into these accounts. And that's what my strategy is. We want to compound the income we have with and buy more shares of good companies that pay dividends and aren't at any risk at cutting those dividends. And that is something that I'm learning along the way too, how to evaluate companies in this manner. I don't want to buy companies that are at risk of cutting their dividend. One of them actually did. Algonquin Power and Utilities was under some pressure, and that is a position that I need to consider going forward, and why I didn't see this coming prior. So if you want to check out that video on Algonquin Power, there'll be a link in the description, and hopefully you can get some insight into that video. Thanks for watching this update. Make sure to like and subscribe if you want to see more on this portfolio, and stay tuned for future content. Comment below how you think your portfolio will do in the month of March. See you next time.